Taking a look at Ethereum Classic on the weekly, if you turn on the 200 moving average here, you can actually see we've come down to test it. We did wiggle below it a little bit into this green box of support, but we did find support off of it. And from the bottom of this wick to where we are now was a 46% rise, so that's pretty decent. This will be interesting to see how this plays out, especially considering Bitcoin has it come down to test the 200 weekly moving average. If Bitcoin does come down to test the 200 moving average on the weekly, it'll be interesting to see if it pulls Ethereum Classic with it, potentially continuing the downtrend here. But it is worth a note from the previous all-time high to where we are currently is a 87% drop, and to the low here is a 91% drop or so. So this could very well be the bottom. Taking a look at the daily chart with the Ichimoku cloud and the EMA ribbon on, you can see this test we've had of the green box of support, as well as the 618 level here on the Fibonacci retracement. So you can see here that the price action did come up to test the EMA ribbon once, and we got rejected out of it. This is to be expected, since we usually never only test this once and then break through it, especially on the longer time frames. And what will be interesting to see here is how Ethereum Classic interacts with the EMA ribbon on its second touch. We really need to see it come up here and start testing this relatively heavily, so that way we can break it to the upside. Or else we're going to see something like back here where we come up to test it and then get sent lower. On the 4 hourly, you can see we've been interacting with the EMA ribbon quite a bit through this move to the downside. Here we did break above it, but ultimately got rejected off the Ichimoku cloud, which sent us further down. Really, we need to break these levels to the upside so that we can potentially form a new uptrend here. The Ichimoku cloud, where it is here on the 4 hourly, is also around the range of where the EMA ribbon is on the daily. So we definitely have some pretty heavy resistance in this range, in my opinion. Things are looking a little bit better here on the hourly chart. Back here you can see we did have a fake out above the 200 EMA, and we ultimately got sent lower. Here you can see we're actually testing the 200 EMA again. We have turned the EMA ribbon red, and we have broken above the Ichimoku cloud. So this is a relatively good sign. If we can really start testing this 200 EMA and then break it to the upside, use it as support, we could very well be seeing a new uptrend forming. So to sum things up here, it's definitely worth a note that Ethereum Classic is still technically in a downtrend. You can see that we're still setting lower highs, right, as well as lower lows on the daily time frame. So still technically in a downtrend. So if we do find a bounce here, we really need to start setting higher highs, especially above this previous high here. So that way we could see a new uptrend forming. So if this is the bottom here, again, we need to break this previous high to the upside, which is sitting around 54 bucks. Right around this region, anywhere between say 25 bucks and 30 bucks is where the Ichimoku cloud and the EMA ribbon is sitting. So we definitely have some relatively heavy resistance here. I would be looking for a potential rejection around this range. Really, this needs to form somewhat of an inverse head and shoulders pattern here, so that way we don't get sent lower. If we can't manage to hold this green box of support to the upside, which the bottom of it is sitting around $12.97, we'll likely find a move down to the 786, which is sitting at $10. If we can't hold the 786, we'll probably come back down here to sweep these previous lows again. And this range is anywhere between 327 and 473. This is all I have for Ethereum Classic today. If you enjoyed this video, go and hit the like button. If you haven't subscribed already, go and do so, as I try to post content daily. As always, this is not financial advice, and I'll see you in the next one.